Hey guys, what's up and welcome to a new Tesla update video. So today it's a fresh week, fresh start to a very exciting week, I might add, actually more specifically because we have earnings, of course, after the bell on Wednesday. So that's always exciting stuff. But yeah, all that being said and done, ladies and gentlemen, market's about to close in just a few seconds. Tesla will be closing at, we'll say 7.78%, putting us at $143.80. So not a bad day, if I do say so myself. Also outperforming the market for sure today. Even the QQQ up 2.2%, meaning Tesla should be up about 4.4, let's just say roughly. Clearly severely outperforming the market by a good amount. So ladies and gentlemen, what does this mean? Is this over? Is this the top? Is this it? You know, is it bearish? Is it bullish? Like, what's happening? Where are we? What can we expect? And yeah, we're going to go over all that. I'll give you guys my opinion. Of course, as usual, if you find these videos useful, informative, helpful, whatever, don't forget to hit that like button. It does help quite a bit. And of course, none of this is financial advice. Make your own decisions, do your own research. I'm not a financial advisor. This is all just for fun. But all that being said and done, ladies and gentlemen, so jumping right into it, beautiful day, beautiful green day. And I'm sure you can see a very important thing that I shouldn't need to point out, but I, of course, will point out just in case you don't, for some reason, see it. We are, of course, above not only the blue line, which was, step number one, but more importantly, step number two, and probably the big important step is the fact that we did cross this downtrend yellow line all the way from here, right? So arguably, you can, again, I don't want to confirm it just yet, mainly because, like I said, whenever you have any breakouts or even breakdowns, I have that, like 3-day rule where, especially with earnings coming up on Wednesday, I think this 3-day rule is extremely important to apply here because it can definitely destroy what we see. However, as it is today, we are arguably breaking the medium, not the overall downward trend, which is the red lines, the medium downward trend, which of course are the blue and the yellow line right here, right? So the fact that we went above them, arguably kind of, did a small little retest intraday and then just pushed straight up and closed well above it. I'm not gonna lie, not a bad sign, not a bad sign. Again, I don't want to just flip and say, that's it guys, it's time to moon. I will say it's looking good, but again, especially with earnings coming up after the bell on Wednesday, completely can destroy this, right? So this is in my opinion, a moment to tread very cautiously. But all that being said and done, let's talk about it. So the overall price target I had was like that 137 to 140-ish, right? I kind of kept saying how I think that's the most important level, and I would be surprised if we break it. Well, not only did we break it, we actually broke past it, held above it, and of course went above the yellow line. And of course, we are still within this channel that I did talk about. Remember when we were all the way back here? Yeah, so, we're still bouncing off of that into this channel, and we're still essentially chilling within this channel, moving our way up. And in all honesty, I would not be surprised if tomorrow was a little bit of a sideways day, and then Wednesday, we actually rallied to 150. 150 feels like it's absolutely not out of the question. However, with that being said, I would be pretty surprised if we break over 150. So again, we have a gap over here, just in case you missed it, right? We do have the gap pretty much exactly at 150, actually, right over here, this candle right here. Right, so keep that in mind, guys. Right here, you can see it more obviously on the 4-hour chart. We do have the gap to fill at like 149.85 or something like that. So that's, I do think we're going to fill that. I really strongly do think that we will fill that probably before earnings, maybe tomorrow, maybe Wednesday, right? Doesn't really matter that much in my opinion, but I do believe that that gap will be filled. Now, another thing to note is the fact that on the daily, right, for instance, the RSI looking pretty damn nice, right? Nothing really too much to complain about there. But again, just because the RSI is looking nice, it doesn't mean that it's only uphill from here. It just means that, we are arguably breaking the downtrend. Even the RSI, you can see all these like levels over here. We have officially skyrocketed past them, with these levels back here being levels way up in these areas up here. Like this level up here was back when Tesla was like sitting at like 220s, man. This level right here was when Tesla was trading around like 200 almost, right? Like 190, 200. And our size above both of them while only being at like 143. So just, food for thought. So I definitely think, again, I don't want to jump to conclusions yet, especially with earnings on Wednesday, but like I said last week, if we do break both these lines, and especially the yellow line, and close above it, and now more importantly, we see follow through and or at least like holding above it, you can absolutely start making arguments that the bottom for Tesla is in. It doesn't mean that it's guaranteed, of course, but you can start discussing it, in my opinion, and you can definitely start making plausible arguments that Tesla's bottom is pretty much in, and worst case scenario, we pretty much make an arguable double bottom play from here, which I still think is possible. I still think it's possible we come down to like the low hundreds still. One more time, I definitely think that's absolutely still possible, and most likely actually will happen. Will we go lower than this low here? Still possible. However, with this move today and the closure today and everything, it does make it a lot more convincing that the bottom is mostly, a very good and healthy chance that it is in, especially the fact that we are on some pretty nice, respectable volume today in line with, pretty much all these days back here. So yeah, it's looking pretty good, guys. We're above the 21 EMA on the daily. We did close above it Friday, and we're well above it today with some nice follow through. So that's looking pretty good as well, right? We have the Bollinger Band, which we are, of course, skyrocketing right past the green line, which is why I expect us to kind of potentially, maybe chill, maybe go up to 150 at most, and then most likely chill and consolidate a tiny bit, pretty much up until earnings, which isn't very long, of course. So we'll see what happens with that. There's a chance that earnings is kind of a nothing burger and nothing really happens, and it just ends up being a massive IV crush. That is also a possibility. So we'll see, of course, how that comes into fruition. We are very, very close to the 150 or the 50-day moving average, which, is definitely a level that, can give us some considerable resistance, which is essentially sitting at that 150 level, give or take, right? So that definitely is a level that I'll be looking at, is and the 150 level. So 150 to 153, absolutely without question, is my next level that I'm personally looking at. And I really do actually fairly strongly believe that we will be touching it sometime. Honestly, pre-earnings, in my opinion, would be probably the time I would expect, or we essentially fall back down to let's say 135-ish into earnings, and then maybe earnings is good and we rally from there. However, I personally believe the more likely outcome is we rally into earnings, 150, most likely get rejected, and then have the typical Tesla, crash post earnings. It always happens. It feels like it more often than not. And then from there, we, of course, finally, which by the way, I still strongly believe that this ascending triangle that we're in, ascending wedge that we are in, will play out to the downside, right? Like I said, these situations right here, more than not, play out to the downside, and I do strongly believe that'll happen. So essentially, the move I foresee happening right now is, let's say tomorrow, a little bit of slight red day or sideways, something like this, and then we rally up on earnings day, pre-earnings, of course, up to 150, right? And ultimately, the RSI, let's say on the 1 hour, for instance, ends up making, the stock makes a higher high, the RSI most likely will make a lower low. Oops. Right, and I, so we start essentially forming a bearish divergence, and then we get that 150 resistance, the psychological resistance, the supply resistance, the 50-day moving average resistance, things like that. And then from there, with the earnings as well, we get the actual rejection. We most likely fall back down, and I would not be surprised if we actually come back down to somewhere around the, maybe like the 120, let's say, even as low as potentially like 113, right? That would not surprise me if we come down like this, retest somewhere over here. Again, roughly, right? This is just a very rough example. And then most likely retest successfully, I hope at least, and then we rally up from there. That right now is what I personally foresee happening, mainly because of how today's movement happened. But again, this is a very rough guess, and I guess educated guess, but specifically with earnings coming up, and that is one of the few catalysts, in my opinion, that can completely destroy technical analysis. Earnings is just, it's quite unpredictable, right? If, let's say, there wasn't an earnings coming out anytime soon, this would be a fantastic looking chart right now. Pretty bullish reversal looking and everything. But again, with earnings on its way in literally just 2 days, that can change quite a few things over and over and over. Now, again, another thing to pay attention to that's important is to take a look at TSLQ, right? This is essentially the inverse of Tesla, which, is still overall pretty new, but, not too much data here, but nonetheless, it is, as of right now, an inverse of Tesla. So essentially does the complete opposite of what Tesla does, almost exactly, right? And you can see we did break down from this little downward wedge. We came down, and remember how back when we were still up here, I talked about these levels down here, like this kind of 60, anywhere between the 64 all the way down to as low as 60. We're very damn close to that, and this level would essentially be Tesla going to 150, would essentially bring TSLQ back to around these levels, where I personally believe this will have a bounce, which also coincides with Tesla going up to that about 150, 153 level, being the 50-day moving average, most likely getting a rejection, and then most likely making its way back down, and overall getting an actual solid retest of the breakout from this yellow line. So something like this. is what I foresee, right? That's just a rough example of what I personally think will happen, in the next several weeks. And this also kind of lines up with a SPY looking, SPY is looking very confusing right now. So the thing with SPY is it has a little bit of a bearish divergence. You can see the stock, or I guess the stock, I guess it is the kind of stock. But essentially SPY did make a higher high on the daily, which actually is good. That's great, right? It not only is a higher high, it closed in the 400s. It arguably finally broke this downward trend that has been in literally since all-time highs, right? Constant rejections over and over and over, and this is the first time it's closed above it. Literally the first time in, like, how long has it been since all-time highs? This was on January, a year ago. More than a year ago, actually, right? More than a year ago, about a year and a month, roughly. It's been in this downward trend that's constantly getting rejected, and this is the first time in just over a year it has officially closed above this downward trend. So that's interesting. That is interesting. Again, this is why I have my 3-day rule. It's not fully convincing yet, but similar to Tesla, it's a damn good look, and it's a damn good start to a potential downward reversal, I guess. The thing that's concerning is the fact that even though it made a higher high, you can see in the daily, it absolutely did not make a higher high on the RSI. So, a little bit of a bearish divergence setting up over there, and definitely some rejection happening here as well, right? Taking a look at the 50-day moving average, you can see we are well above it, and we're above the 200-day moving average, and the fact that we're closing above both of them on SPY, I'm not gonna lie, man, it's looking pretty good. It's looking pretty good. But taking a look at the weekly, however, on the flip side, you can see we are, of course, getting smacked by the 50-day moving average as we have had in the past. So we're in quite a pickle here, man, with this market. I'm not gonna lie, it is getting quite interesting to say the least, ladies and gentlemen. So yeah, I don't know. Looking in the weekly for Tesla, you can see the 200-day moving average is at 167. So to me, like, the realistic best case scenario before like a major rejection would be this 167 level. I don't think we'll even get there, but if we do, and if you're looking for something else, like, a higher level to potentially, I guess, go to, yeah, 167 would be that level on the weekly, where I would expect, if we somehow get there, for that to be like a major rejection. But I don't think we'll get there, mainly because that would imply that we broke to the north out of this ascending wedge, which, again, it's not impossible. It's just substantially more unlikely to break upwards than it is to break downwards on these, I guess, patterns, if you will. And the final thing I want to show you guys and take a look at together is, of course, going to be the Fibonacci. So if we take the Fibonacci, take it from this arguable, swing top to the potential, arguable swing low, you can see the 0.5 Fibonacci, which is, in my opinion, a very common, a very healthy level to retrace to, whether you're in a downtrend or an uptrend. In this case, we're in a downtrend, retracing up to it as a potential rejection zone to potentially continue the trend, which is still overall for Tesla still down, right? Even though we did break out of this downward trend, technically Tesla is still in a downward trend, because, first of all, we're below the red lines, and second of all, you can also argue that its downtrend is not fully gone yet until you set in an actual higher low. And I personally don't think that a higher low is really truly set up until you break above somewhere around, at least like these 170s over here. That's kind of the way I see it. But the point is the fact that regardless, you can see that the retracement from the arguable swing top to the swing low, around that 100 level, again, that 0.5 Fibonacci, man, sitting pretty much just dead on 150. So another thing to keep in mind, I personally believe 150, if we do get there, which I think there's a decent chance we will, should in theory be the rejection zone. And then from there, of course, we get the actual rejection and most likely break out of this, make our way down. It doesn't have to be like a straight crash, but definitely make our way down slowly but surely. And then most likely get get some gap fills down all the way over here at 122, maybe even as low as this 113, right? And then most likely get a retest somewhere around this level over here of this overall break on this yellow line, and then rally from there as the SPY also ends up making its way down as well. Again, that's just a theory. Market's in a very interesting situation, so it's hard to tell for sure. Wow, this video has been going on for a long time. I didn't even realize. Man, sometimes you just talk about it and just time flies. It's insane. But yeah, that's kind of for the video, guys. Thanks for watching. I don't want to drag on for too much longer, so that's kind of all I have to say. So let me know what you think down below. And I think we're in for an interesting week with earnings. Until then, peace.